Hello all, welcome back to my channel. Please like, subscribe, and also press the bell icon. So today's video is about Jefferies has given a buy report. I've just gone through the report. Just I wanted to give you the points which were actually highlighted by Jefferies. So this is the report. I will also put in the description. So that actually you don't need to spend effort on going through it again, since I already spent a time on that. Just I thought of making a quick video on this. This is on the IDFC First Bank research report. So as always, disclaimer: I'm not a SEBI registered financial advisor. This is not a buy or sell recommendation. Please take decision your own. Just this is for education purpose video. Let's quickly start. So this video is about the key points of Jefferies on the IDFC First Bank report. So first point is actually on the fixed deposit and the savings bank account interest rates. What has actually Jefferies has analyzed compared to other banks. So as you can see here, so the term deposits rate. So this is the actually different rates given by an 1 to 3 years. 1 to 3 years deposits. So these are all the ratings actually which currently given by different banks. As you can see, actually compared to other banks like S Bank, Bandhan Bank, RBL, Ujjivan, Equitas and all. So this is somewhere in the middle actually. Of course, ICC Bank, Axis, HDFC, Kotak and all, they're paying less. But however, as you know, because of the legacy bonds and other interest cost long-term borrowings, what IDFC done, of course they have to give a competitive rate to just to have the uh, reduce the cost of funds. So as you can see, this is the again the rates compared to other banks. So it's not that much actually. This is the another very good thing about this bank is somehow they have built a very good brand in the couple of 5 years. Because of that, even though the rates are less or maybe competitive rates, in spite of that it is able to get a lot of deposits and other things. Since I already made a video on the detail about what is a deposit percent and other things, I don't want to repeat the same. That's why I've just actually given the different comparison rates. As you can see with Ujjivan Bank and other things, so you can see here less than zero point 0.1 million, this is just paying 3%, and these are the 4%. You can see compare the rates here. I mean the main one is this one. Here also you can see this is paying just 7%. Other banks are also paying 7.5, 7, 6.5 and other things. What I would like to say, similar interest rate. I think not. I think some of people are saying, I think because of the interest rate given by IDFC First Bank, it is able to gather a lot of deposit. I think that is not true. So they are also paying very less only. So in terms of fixed rate loans compared to other banks, so I also mentioned earlier what this means is, so currently IDFC First Bank giving the loan at about 12%, 15% like that. This since 85% of the loan book is in retail, so 60% is in a fixed rate percentage. Even if the as it is given here, if RBI reduces the repo rate, then actually, since 60% of the loan book is in fixed rate, so the margin what it's going to impact other banks. For example, if you see a Kotak, ICC Bank and all, since it is floating rates, loan is higher, so they will not have much of benefit. So since IDFC First Bank has got 60% of its loan, so the if the repo rate reduces, I think the cost of funds also will reduce, and IDFC First Bank will be a huge beneficiary. I think that's what Jefferies is trying to say here. Comparing to larger banks, I think this is at a really good loan book is there. So in terms of employee details, I think this was not there in any of the other my video. That just I thought of covering it. So currently employee strength is actually at 35,352. It is actually growing at 20% actually from financial year 19 or 20. So as you can see here, only 12,000 were there. I think this is 20% going each year. I think they already got 35,352. So you can think of this. I think this is definitely becoming a bigger bank. That's what I want to say. And in terms of attrition rate, I think as Mr. Vaidyanathan always saying, so he is actually kind of a building a great bank. Even it's also true for the employees. That's why a lot of people are not leaving the company. You can see here, I think big banks and all, I think ICC Bank also, anyway, it's good. People are not leaving so much. But if you see other large private banks, 3% is the attrition rate. So how it helps is, if you want to bring a new employee, right, it's always cost more. Either you have to recruit from outside, means you should pay more, at least 30-40% more than what is the current employees withdrawing the salary. That's why it will always increase the cost to the company. Even Kotak Bank, you can see here, I think 7%, HDFC Bank is 7%. The attrition rate is too much for them. I think this is where I think, one of the best advantage for the IDFC First Bank, even though it has, built a great brand value among the customers, even in terms of employees also, it is kind of a, sticky employees. I think once they join, I think they don't leave so easily. That's also a real benefit actually. Even though I think I also, there is another slide in the Jefferies. They also given median salary hike of 10%. I think because of this, huge employee addition, as well as the cost of the salary hike and other things what they're giving, the cost to income ratio of the company is also very much high actually, at most almost like 72% currently. I think in the most of the TV interviews also, Mr. Vaidyanathan said they will bring it to 60%, the cost to income ratio. If they bring it, definitely profit will increase. Yeah, this is one point I would like to mention. And banks fixed fee income, I was thinking that okay, everything they're giving freely. As you can also, I've also added this in the slide. For example, IMPS, I'm using actually ICC First Bank, sorry, ICC Bank. So they are charging me 5 rupees or something for the transaction. NEF charges, anyway, most of the bank is free. This RTGS, anyway, I never done it. Checkbook reassurance, actually they will charge money. You can see 2 to 4 rupees, but IDFC First Bank is giving freely. SMS charges, currently the ICC Bank is not charging, but anyway, it's also free. Cash deposit and withdrawal, actually there is also a limit, but this IDFC First Bank has given this as free. And demand draft, interest, I don't want to go through this, anyway, you can also read it here. Debit card issuance, actually, of course they charge, I think 150 or something. So these are all free. I was thinking, if they're giving everything free, so what is the, I mean, fee income of it to generate like that? So actually, I'm surprised to see this Jeffries report. In spite of, despite not charging 28 common services, fear asset ratio of IDFC First Bank is higher than most large other banks. I was really surprised to see this, report. You can see here big banks like HDFC Bank, ICCA, Axis, Kotak, and all these are actually earning just 1.6% of the total, assets. But here, see here, this is our champion IDFC First Bank. This is actually getting 2.1%. Even though they're not charging for the common services, still they are able to make money. I think this is, in a long run, if you keep it, if you have in your portfolio, I think you should never sell it. I think as long as Mr. Vaidyanathan is at the top, so definitely it will going to return good returns. I think over a period of time, you should always look whether the company will come, I mean, share price will come down or it will keep on growing like that. So in my opinion, I think, I mean, again, it's my personal opinion, since I am also actually largest. I mean, in my portfolio, I think this is one of the largest, holding company. That's why I'm also, maybe I'm a little bit biased. So you should take the call yourself. But what I say is, continuously there is a chance that this can give 20 to 25% returns over the period of a long term. That's what I want to say. And I was also, I mean, just I want to also give on what is the plan for IDFC First Bank. I think this is also what I think, and also what is the equity dilution. I was thinking every year they are raising money. I thought this can impact the bank, but I think as you can see here, this they also actually checked with the a bank. I think Jefferies has come up with this report. So there are actually two fundraisers planned in the future. I mean, at least till 2029. So this year means 24 and 25. This financial year they are they're going to raise 4,500, and by financial year 27, that means 2026 and 27, they're going to raise almost like 5,500 crores. As you can see, just I have added the numbers here. I think if they're rising this year, maybe the floor price should be 100, more than 100 only, because they already, the last year October what they raised, it is at the price of 92.45 was the floor price. So even if keep a 100 rupees price, 45 crore shares will be issued again. So currently, because of the merger May 17th, the number of shares will become 690. 690 plus if you add 45, 735 will be the this one, number of shares. So anyway, I think next year, I think financial year 26, they don't raise any money. So it's also, I mean, I think one good thing is if they raise it at two times book value and all, it will raise the book value. It's good. Uh, I mean, this is what about I would like to say. I mean, there are two fundraisers. So even if you say this one also, if they rise, definitely they should rise at 150 rupees or something. So if they raise it also, it will be I think another 45 crores. So 735 plus another 40 means it is 780 crores will be total shares by financial year 27. So I'll give you the next valuations. I mean the price and other things what they have come up with. So what is the current valuation? What Jefferies is saying and what is the target price they are saying? So currently they say IDFC's first bank is actually trading at 1.5 book value. This is cheaper compared to other bank. Axis Bank is at 1.8, HDFC First Bank is 2.1, Kotak is at 2.2, and ICC Bank is 2.3. That's what they said. That's why they have come up with a report saying that actually the upside could be 109. I think this is the price what they're talking about for 12 months period of time, not actually for 2 years, 3 years like that. Within 12 months, the price should become upper cap of 109. Minimum in a base case also the price should become 100. That's what they say in 1 year's time. Yeah, this is the current year's valuation what they're saying. So 109 means you can think of it is the price, currently price is at around 82 or something. So it will be almost like 37 percentage rise will be there. So if you're getting 37%, who it is kind of a close your eyes and buy the buy the share, because the market is at all time high. Since there is also repo cut will be happening in few months time, I mean in 1 or 2 quarters time, I would definitely say this is actually kind of a good buy. If you are not bought it, if you are holding in your share portfolio, don't sell it. That's what my recommendation. Future valuation and what could be the target price for financial 27. So this is what the statement they have come up with. Actually this is currently anyway, this year financial year I think 2934 crores. I think this is what they have ended the last financial year, because the result came few days back. And financial year 25, what they said, the profit will be 3442, and by financial year 26 the profit will be 494,970 crores, and financial year 27 means March uh, 2027, the profit will be 6,985. This is what they're predicting. And in terms of valuation, that's what I want to say now. So the earnings per share, what they're saying by March 2027, the EPS will be 9.1. They're saying the book value will be 72. I think this is what they have come up with. So let's quickly check and try to check the share price. 72 is the book value. Even if you give a uh, three terms of book price to book value, because this is a growing bank and this will also become good bank, and also 85% of the uh, loan book is in retail, that is one of the safest bet. So it will become 216. Currently the price is at 82, so definitely 216 by March 2027, the price should become 216. That is almost like double. In 3 years, if it is become double, I would say this is a good bet. Unless otherwise, you are expert in finding the multi-bagger. I would currently I am also holding these shares. I'm not going to sell it. I will continue holding this. Yeah, I hope this video helped you, and also the key points what Jeffries has given. Please like, subscribe, and also press the bell icon as well. If you like it, the YouTube also recommends to other people. That will help me to grow my viewers. Thank you so much. Bye for now.